Central banks continue to hold meetings while markets are still experiencing storms. Since Wednesday, risk assets have been falling. On Thursday, the sell-off only intensified. The US dollar is gaining in value and bond yields are rising. Although investors have not learned anything new and the stock market sentiment has become gloomy. Fresh data from the United States is not very optimistic. At least the US labor market is still overheated. Analysts at InstaForex are ready to tell you about the main events and provide forecasts. You are watching a fresh US market review. As our analysts had expected, the FOMC meeting had a negative effect on the US stock market, while the main indexes started losing value. Thus, on Wednesday, the Dow Jones Industrial Average closed with a decline of 0.22%. The Nasdaq slid by 1.5% and the S&P500 lost 48 points or 0.94% to trade at 4,402 points. However, on Thursday, the situation could become even worse, since early today, the US main indexes have been nosediving. Indexes futures have lost 0.5 and 1.1%. During the US trade, the S&P 500 is expected to trade within the range of 4,340 and 4,400 points. On Wednesday, US stock indexes slumped just after the Federal Reserve kept the key rate unchanged and upwardly revised the economic outlook. The regulator also warned that the fight against high inflation was not finished yet. The Fed's announcement was complemented by a forecast and a dot chart, which showed that this year we will see one more 25 basis point rate hike with a peak at 5.75%. According to the forecast, the key interest rate will be cut by 50 basis points to 5.25% by the end of the next year and to 3.9% by the end of 2025. The report also suggested that inflation will slide to 3.3% by the end on the year and approach the average earlier target of 2%. At the press conference, Fed Chair Jerome Powell warned that inflation would have to slump to reach the target. He also pinpointed that a solid economy would allow the central bank to continue exerting additional pressure on financial conditions with smaller losses for economic growth and the labor market than during the previous fights against inflation. Nevertheless, investors are facing some short-term risks, including higher energy prices, the strike of workers in the automotive industry, the possibility of a government suspension, and the pause on student loan repayment. Signs of unstable economic growth may force the regulator to cut the key rate earlier than planned. Futures that depend on the Fed's key rate confirmed that traders are betting on a 60 basis point cut in the next year. As a result, the benchmark rate will total 4.8%, and this could be compared with the reading of 5.1% indicated by the Fed in its revised forecasts. Pressured by a set of updated economic projections, large-cap stocks sensitive to changes in interest rates, such as Microsoft, Apple, and NVIDIA, fell sharply, thus dragging the tech-heavy Nasdaq down. Shares of a marketing automation firm Klaviyo added 9.2% in its trading debut on the New York Stock Exchange, notching the third in a flurry of recent tech IPOs after ARM and MapleBear. MapleBear lost 10.7% after ARM Holdings was down by 4.1%. Pinterest shares price gained 3.1% after the company announced a share buyback of up to $1 billion. Among the 11 major sectors of the S&P 500 index, rate-sensitive communication services and technology suffered the largest percentage losses. US stock index futures extended weakness on the Thursday, wind down by growth stocks and a jump in treasury yields. Apple, Meta, Alphabet and Nvidia dropped between 0.6 and 2.3% in a pre-market trading, while the yield of a 10-year treasury bonds hit multi-year highs. Today, traders' bets on the benchmark rate remaining unchanged in November and December stand at 71% and 54% respectively. According to the Fed Watch tool, the volatility index, also known as the Wall Street's fear gauge, reached its highest level in the last 3 weeks, reflecting growing investor anxiety. As for the state of the labor market, the latest data shows that it remains stubbornly resilient, and the report said that U.S. initial jobless claims fell to 201,000, down from the previous week's revised level of 21,000. The economists expected to rise to 225,000. In the corporate sector, the weak performance of the recent listings has dampened hopes of a likely reversal in the initial public offering market. Marketing automation company Klaviyo dropped by 3.2% to $31.70 in a pre-market trading. Broadcom lost 7.2%, and the news that Google's executive discussed dropping the company as a supplier of artificial intelligence chips as early as 2027. Shares of Marvell Technology rose by 5.3% as the report indicated that the company would replace Broadcom. Furthermore, Warner Bros. Discovery and Paramount Global added 0.3% and 0.9% respectively, following the news that writers and producers were nearly in agreement to end the Writers Guild of America strike. Finally, speaking of the currency market, Thursday's focus was on central banks' policy decisions and a stronger dollar. Most major pairs slid against the American currency. As a result, the US dollar index briefly touched 105.60 before trimming gains to 105.5. According to the forecast, the index is likely to trade between the levels of 105 points and 105.90. On Thursday, the US dollar index reached its highest level since March, while the British pound and Swiss franc suffered steep losses amid changes in interest rates by major central banks. The Swiss National Bank unexpectedly kept its interest rate unchanged, and the Bank of England made a similar decision, while Sweden and Norway raised rates as expected, and the latter surprised markets by signaling that it might make another rate hike again in December. And this news triggered a lot of volatility in the market, and the pound, the franc and the Aussie suffered the most. Meanwhile, the US dollar benefited from this situation and may continue to strengthen. Investors will assess the Bank of Japan's monetary policy decision on Friday. Meanwhile, the Canadian dollar lost most of the gains made on the back of oil's momentum and accelerating inflation. The dollar-loonie pair was trading near 1.35. The pair is expected to trade within the range of 1.3470 and 1.3540. The loonie lost ground amid stronger US dollar and weaker oil prices. On a Thursday, oil prices dropped but rebounded slightly as the US session opened. As the dollar rises, oil and other commodities become more expensive for buyers using other currencies, which could slow economic growth and harm fuel demand. Potential pressure on oil prices was also signaled by central banks in other countries. Nevertheless, oil prices have recovered quite quickly and regained some of their weight, signaling that the market still expects Brent to reach triple digits per barrel. In the cryptocurrency market, the top coins were in the red. The inverse correlation with the US dollar index and the direct correlation with the Nasdaq is confirmed once again. As a result, Bitcoin, which started the day fairly strong, plunged by a straggling 2.4% into the bearish territory, falling to $26,400 at the opening of the US trading. As for the top altcoins, they followed Bitcoin. And despite the fact that the cryptocurrency market reacted strongly to the Fed's decision and there is no terrible news in the market, the crypto assets are affected by risk aversion. As for Bitcoin, the flagship crypto may return to the support area of $26,400 and $26,550, settling in this range today. Breaking through one of the boundaries, Bitcoin may drop to $25,900 or rise to $26,800. Make profits with the InstaForex. Your feedback is appreciated. See you on InstaForex TV channel.